The markets are seeing red. This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price, XBX index is down about just over 1% for the past 24 hours. Now at $35,889. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin's daily chart is leaning bearish. The breakdown of the 3-month rising trend line implying the resumption of a broader decline in BTC from November highs. Popular indicators like the relative strength index and the moving average convergence divergence, or the MACD histogram, are also biased bearish. CoinDesk's Omkar Gavoli saying initial support is seen around $34,000. With a rosier than expected April jobs report released this morning, showing a rise in U.S. jobs by almost 430,000 and an unemployment rate holding steady at 3.6%, that data may encourage a more hawkish Fed to, stay more hawkish, continue rate increases, and reduce its balance sheet. Liquidations on crypto-tracked futures exceeded $400 million in the past 24 hours, nearly half of those liquidations attributed to Bitcoin futures alone, according to CoinGlass data. Right, joining me now to discuss BTC price and other Bitcoin news is our Week in Review panel here at CoinDesk. We've got Managing Editor of Technology, CHRISTIE Harkin in Toronto, and Managing Editor of Markets, Brad Cowan in Austin. Hello there, Brad and CHRISTIE.
Hello, happy Friday.
Happy
Hi,
Friday.
Christine. Welcome back.
Good to see you. Thank you. All right, so Brad, let's start it off with this bloodbath we're seeing after a relief rally on Wednesday. What's going on?
You know, that's an interesting term, bloodbath. We've had a sell-off, and obviously in traditional markets, in stocks, they are freaking out. You're in Bitcoin land, we've had a sell-off. I don't know if people would be categorizing it as a bloodbath just yet.
We've gone across the markets.
Definitely. It's red for sure, but we've seen much harsher sell-offs.
Down for Bitcoin and other cryptocurrencies. What you mean?
Bitcoin is so notoriously volatile. We've gone from, we were in a range kind of in the low 40s, and now we're in kind of the high 30s, and yeah, it's down, but it could get a lot worse. That's what people are now starting to talk about is, as you pointed out in your intro, some of the charts are starting to look a little ugly. These are just technical indicators, so they're not absolutely predictive of the future. Nobody knows what's going to happen tomorrow, but they're suggesting, sort of like a weather forecast, 6 days out, that things might turn a little ugly. Dominic Dantes, our chief technical analysis, is saying we could see 30,000. And then if we're in the 2018 bear market, we saw an 80% drawdown from the all-time high, and that works out to about 17,800. So that's not out of the question. That could be that's kind of what people are worried about. So far, honestly, Bitcoin's hanging in there pretty good right now. It's sort of tracking along with stocks pretty much. It's not falling out of bed really. It's down, but it's not a super sell-off right now.
All right, fair enough. I was just seeing that MicroStrategy, they're the world's largest, accumulator of Bitcoin. They have about over 129,000 Bitcoins right now. And, they had an earnings call this week. They said that if Bitcoin were to go below $21,000, they may be forced into a kind of margin call since they bought Bitcoin with a loan from Silvergate. So I wonder if you see any possibility of Bitcoin going that low.
Oh yeah, for sure. Absolutely, no question. There's a certain Schadenfreude. It's probably there's a Murphy's Law, here, where if something can go wrong, it will go wrong. people know where in the market know where some of these pain points are, and they might shoot for some of those. It definitely often happens in the options market where people try to push the market around to where people really have to puke is the word they use in financial markets. But who knows? Who knows? It could be something else happens and Bitcoin takes off. So, but yeah, It's definitely possible for sure.
Meanwhile, we're seeing the Luna Foundation guards are continuing to accumulate Bitcoin as well. Looking at mining, so this was news of the day. Bitcoin mining won't be banned in New York anytime soon. A bill that aimed to place a 2-year moratorium on certain types of proof of work crypto mining operations in New York will not be considered by the Senate Environmental Conservation Committee during its last meeting of the session, and which is good news for mining, obviously, in New York. Also, we've had a slew of miners report earnings for the week, CHRISTIE, and I believe you've been tracking those.
Yeah. So to get back to the New York mining moratorium, this is kind of promising because what happened is we had the assembly version of the bill that got passed, and now it goes to the Senate, and the Senate version of the bill also has to pass, and they're just not going to look at it. And that's kind of interesting because the larger implications is, as you said, it would be placing a 2-year moratorium on some proof of work crypto mining operations. Even this bill is narrower in scope than a previous bill that failed, that would have imposed a 3-year moratorium on all crypto mining in the state. So the fact that it seems to be gradually getting walked back is, I think, a good thing for Bitcoin and for the mining companies that are setting up shop, not just in New York, but in the rest of the states, because it sends signals. As Joel Olson, New York state lead at crypto lobbying organization, the Blockchain Association, has said, he called it an existential threat to the crypto mining industry. And even a 2-year mining ban would send a bad message to the blockchain industry, to crypto companies and Web3 companies, that it would indicate that New York State and any other state that wanted to follow suit really would be sending a message that miners aren't welcome. And there are lots of great reasons to have miners, obviously, if you're into the Bitcoin mining scene, to have them around. Just so this week we saw that Argo blockchain, its shares have gone up. A lot of mining facilities in Texas are doing really well. And today we even had news, I think there's even going to be more wind farm mining opening up in Texas as there are new deals being made to get Cypher mining and Wind HQ. They just secured a loan through BlockFi to set up more wind-powered rigs in Texas. So there's a lot of growth happening in the states, and I think that having positive legislation is going to just help along those lines.
Mm-hmm. Just to add to that, we heard from Marathon Digital this week. They had their first ever earnings conference call. A lot of miners appear to be buying equipment at this time. They want to focus on deploying more than 70,000 new mining rigs, and hopefully that'll aid in growing capital at the firm. Also, RIOT blockchain, they also raised a bunch of money, about $10 million in April, with a sale of about 250 Bitcoins, and they're charging ahead with their own expansion plans as well. So it's interesting, miners are trying to grow in that sense.
Even though the Bitcoin price is down and the profits may be kind of unpredictable, miners don't seem to be, worried.
Holding back.
too worried.
Brad, taking a look at next week, where do you see the price headed?
Well, again, some of those levels that, first target on the upside would be recapturing 40,000. On the down, 36.2 thousand is the 100-week moving average. That's seen as kind of a pivotal point if we're above or below that. And then on the downside, 30,000. And as I was saying, like the real pain point would be if we went back to like 17.8 thousand, around the old all-time high. People are still, this has been a crazy week in all markets. We were up on Wednesday after that Fed meeting that seemed a little more dovish than maybe were the expectations. Kind of there's like people talk about the whisper number. There's the official consensus, what people are expecting, and then there's the whisper number. And a lot of times, if the whisper number doesn't materialize, the market reacts to that. So up on Wednesday, and then we just gave up all of that and more yesterday.
What do you mean by the whisper number? I'm just curious.
Well, like, for example, people, the hardened expectation for the Fed meeting on Wednesday was that the Fed was going to raise rates by 50 basis points, and I guess people thought that, but then people were thinking, okay, on the next meeting they're gonna hike by 75 basis points, and Powell basically came out and said, no, we're not going to do that. So in this case, the 75 basis points was the whisper number, and when that doesn't materialize, then people trade on the dematerializing of the whisper number. That's how I'm telling you.
Do you think that's what's being priced in, though?
It is now for sure. I mean, that was clearly the market narrative of the week. Mm-hmm. But yeah, I mean, going forward, people are now kind of worried, okay, fine. Powell says we're not going to hike by more than 50 basis points at the next few meetings, but people aren't sure he's going to be able to get away with that, because we're seeing these inflationary pressures. I was just reading, today's jobs report, 428,000. That is a very strong number. I mean, it was on par with last month, and the unemployment rate didn't go down. But, back in the old days, pre-pandemic economy was adding 200,000. So this economy is still very, very strong job market, and people are worried that that's going to translate to wage pressures, and that will lead to sticky inflation. So people are saying, Powell, there's no easy way out, and I think that's kind of what the market was telling us yesterday and again today.
All right. Christy, finally, ending us off, the Bitcoin community has been all riled up in this Bitcoin Improvement Proposal 119, and I understand you guys have a report on it cooking up, so maybe you can give us a slight preview for next week.
Well, yesterday you talked to Jeremy Rubin, and we are definitely getting together a really good sort of overview of what is going to happen with this, or what could happen with this next week. But so just a really quick rundown. So BIP-119 is a code update, a potential code update. And as we all know, with Bitcoin, it's really, really slow to change. Bitcoin doesn't like making great big changes really fast. And there's been a lot of pushback on this particular proposed code update. So what it does essentially is introduce a new covenant or smart contract, smart contract capability into Bitcoin coding that would enable users to enforce a predetermined condition on the way any Bitcoins within a particular wallet would be able to be used or transferred in the future. It's a smart contract. And a lot of people really want this kind of capability. The problem is, nobody wants to break Bitcoin. And so what they're trying to do, what they're not convinced of, is that this particular check template verify, or CTV, proposal in BIP-119 is the way to go. And even if they think it is potentially the way to go, they're not convinced it's been sufficiently tried out, reviewed, or audited. And as I said, nobody wants to break Bitcoin. So there has lately been a 1.5 BTC bug bounty offered to anyone who can break this code in the new proposal. So if you can find a problem with it, let the developer know, and you may get a 5.5 Bitcoin reward. So next week, what we're going to do is delve into the weeds a bit and see more about what this controversy is, get Jeremy's side of it, and get the side of other developers and prominent voices in Bitcoin who don't really like the way this is being put forward. They feel it's rushed and there's not enough debate. Whereas Jeremy's saying, hey, let's just see what the community wants, because that's what we do with Bitcoin is we get consensus.
All right. Can't wait for the report, Christie.
Bitcoin governance based.
Yes. Well, I mean, I gotta love it. You gotta love a true democracy, decentralized manner of trying to gather some sort of concessions. It's slow. It's dirty, a little messy and confusing, but
and personal.
Let's see what happens.
Sometimes it gets personal. But it'll be good to see if we can pull it out.
Kudos to Jeremy for, trying to be as transparent as possible and appearing with us. So that interview is on CoinDesk.com. If anyone's interested, Jeremy Rubin, who proposed and introduced this BIP-119. All right, we got to end it there. But Christie, Brad, have yourselves a great weekend, and thanks for coming on.
Yes, indeed. Have a good one.
All right. That was our CoinDesk Weekend Review panel with Managing Editor of Technology, Christie Harkin, and Managing Editor of Markets, Brad Cowan. That's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again on Monday, 3 o'clock. Also join me Monday morning at 9 a.m. Eastern in New York for First Mover. You're watching CoinDesk TV.